Hello and welcome to our last YouTube update of this year. Remember, nothing presented in these updates is financial advice, it's just my view of the markets. It's been an interesting year. We learned a lot in Spitfire. Our coaches came up with some brilliant strategies with the probabilities of 80% or more for a level to be hit. And that comes from two traders that never bragged about 90% win rate. But I'm not here to brag. Well, maybe a little, why not? After all, we all worked very hard this year and the results can be seen in the number of pilots Spitfire has now. And for that, we thank you all for your trust. And to end this little intro, I just want to say it's never too late to take your trading journey into your hands and start learning instead of relying on signals. Yes, it will not be easy, especially for your mind, but it will be worth it in the end. And you are hearing this from a girl who, just a couple of years ago, used to listen to Spitty's YouTube updates, and now I'm the one making them. So, long story short, you can succeed if you are willing to put in the work. So maybe make one of your 12 grapes wishes for next year to become a better and independent trader. Now, moving on to the chart. If you have anything to add to this chart, please let me know in the comments, because I don't see anything new. And I don't usually like to admit when a man is right, but our coach Cake said at the beginning of this month, what if Bitcoin will range the entire month at yearly open? And we all had a good laugh. And now we are not laughing anymore because he was damn right. And this price action is terrible. We can see it looks like a correction, everything is overlapping, but how do you count this? No clear count, no trades. These are still the levels I'm interested in. So I'll just move to the right these boxes. We have the 382 98k as a first resistance. Let's update the volume profile and see if we have something here new. Just the value area low moved a little, which aligns better with this 382. So I'll make this one a little bit bigger. Then the next one will be Golden Pocket 108, 110, 786, point of control of the entire range, and new all-time high, as discussed every single time. Go above, below, give a market structure break because it's a swing trade and we are not looking for the best and the smallest risk reward. And then we can enter short. For support, swing failure pattern of 74 lows from April, and that is pretty much it. Because there's a long way to either side, so we have like 11% up and 15% down, and that's a big gap here to wait for trades. I'll give you another little intra level, and that will be this 886 here, and we'll add a box on it, a green box. And the reason for this 886 is if this move up is a leading diag, and it kinda looks like, then this will be a wave 2, a correction, and the 82k should hold for more upside from here, even if it's just a free waves, and we'll see something like A, B, C, and we're looking for some kind of correction. And look at that, if that happens, we can have another confluence around the 382 or even higher. Until something happens in this range, either 886, either take previous month low, or go up to the 382, 98k, there's nothing interesting to play here. And on the lower time frame, it's even harder because the price action is terrible. Before leaving you, let's have a look at some higher time frame candles and what we call in Spitfire the candle framing strategy. I can't tell you much details about it. I know I'm teasing you, but trust me, this one is so good for giving you the bias for daily, weekly, monthly, and so on, depending on your style of trading, that it's insanely crazy how good it works. So, looking at the weekly candles, let's hide this one because we don't need it here. We have this weekly candle. Now, she still has a couple of days before closing. If she will close below this 87.5k low, then our bias for next week will be a bearish one. Moving to the monthly candle. As it stands now, because she still has a couple of weeks before closing, the monthly candle is also looking bearish. And if you remember on our last YouTube, I told you that I would like a swing failure pattern of this low here, of previous month low. This was the reason why I said that, because of this candle framing strategy we are using. Now, of course, it's not going to play out 100% of the times, nothing does, but having a bias will help you filter out the trades you'll take. So ideally, you want more time frames to be aligned and have the same bias. And you can go as lower time frame as 4 hour, 1 hour to play even intraday trades with this strategy. And finally, looking at the yearly candles. As it stands now, it's hard for me to say that we'll see a new all-time high next year, because I'm seeing this gap here that screams to be explored. And if you want, we can add a fib retracement, and we have the same 54, 57 golden pockets that, if you remember, it's on our chart since all-time high. But there are still a couple of weeks until the yearly candle closes, and because it's such an important candle, this is why the price action lately has been, I don't even have words. There are still a couple of weeks before closing, and who knows, maybe she will push up and she'll close above previous year high, which is 108.4, and then will give us a really good bullish bias going into the new year. We'll see how things develop. We are here to react, not to predict. Just as a little reminder, make a habit to zoom out on higher time frames candles, because spending all the day looking on lower time frames might get you lost in the small price action that happens every day. And looking at a higher time frame picture might give you a clear view. This will be all for today. I wish you all a happy Merry Christmas and a wonderful New Year. I can't believe I'm saying this, but I'll see you next year, team. Bye bye.